Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Thursday, June 25th. So, what do we have here for the day? SPY finished up over 1% for the day. Q's finished up close to the same, a little, just a hair under that, up 95 basis points. Big outperformance came from small caps today, up 1.5% today. Bonds kind of quiet today, up 30 basis points. Gold the same today, basically unched flat for the day. Big move down in the VIX today, down 11% from the open. Where did this thing close at today? The VIX closed at right around 32.22. So decent move from the high of the day, which was above 35, to the low. Again, big move over the session of the day and down 4.8% for the day. But again, the VIX started out a little bit hot, I think, for the day. So you could see, as I mentioned, small caps were the big outperformer. Maybe there was some short covering today in some of the banks ahead of the Fed test. I just read over the stress tests. The Fed did make comments on them, so that's a slip right there. But not the Fed test, the stress test, the banks. I think a couple of them are down here a little bit. I think it's kind of expected, I would say. Somebody just asked me what I thought of them. They ran up. Like I said, it could be a little bit of short covering. Interesting that VPOC being taken on the 5 minute for J.P. Morgan. But yeah, I mean they're going to basically be keeping tabs on them. And again, I don't think that's anything to really be surprised at. These banks are going to be very much a part of helping the economy recover and fueling that by issuing loans. So I think this is kind of right in line with expectations, unless I'm missing something. But anyway, that's the banks. Again, to me, overall, it seems like has been, even before when the market was doing really well, that this has been a very difficult trade. I think when these things get super oversold is basically the only time to really get involved in these things, and even then, it's still a difficult trade. They're not trending. They look like they might be. I looked at KRE this morning, and from time to time you can get a bounce, but you could see, maybe they're due for like this. That's why they probably got a bounce today. But they're hurting, right? I mean, and again, they haven't been outperforming for years. So I continue to not think these, unless you're looking for like a dividend play or something like that. I think there's just better places to put your money. And if you're a trend trader, you've probably stayed away from this group as well. And within financials, there's been other areas, right? The credit card companies have acted better. Clearly, any type of financial innovation type company, like faster players within the group, obviously PayPal, Square, things like that, which are not even banks, but they're just better places to be right now. So anyway, I wasn't going to talk about that. I wasn't going to talk about too much about the banks, but it is what it is. Those stress tests just came out, so I wanted to make sure that I covered it. So yeah, so basically buy the dip works again. We've seen these little pullbacks. We saw one, 2 weeks ago, which got bought up pretty quickly. So if you're looking for some type of explanation to that, we could look at the positioning, right? I've talked about this. I tweet this out every weekend, right, about positioning. So if you look at the CFTC report, I think this comes out, even though I don't think this comes out until after Friday. But for example, like if you look at the right, so 616. So I don't think this updates. But again, this is a huge net short position that they've got going on. And usually when somebody's positioned to that side like that, it begs short covering, right? So when you do get a sell off, and the market seems to be going up, you just have to remember kind of how the market is positioned. The Fed is still there. So I think personally that's why we're getting these very shallow pullbacks, and then buyers come back in a little bit. So again, I think eventually we will get more than a 1 day pullback. I think some people are looking at some things like some oscillators and so forth, saying that some of them turned over. What is that one? The NYSI which I don't think I can get in this, but I think you have to go to like stock charts. But in any event, that has crossed over, kind of giving you a possibility at a trend change. I still don't see it here. I see, in terms of the S&P, I still see a lot of chop going on, right? Where did we get to? So we finished up for S&P futures, which again are going to be a little bit different than the SPY because they cut off at different time frames. But we're pushing right into that bottom of value. So we talked about this. We cover all this. If you're not a member of Tribeca Trade Group, we do a couple things in the morning. Every morning I send around S&P charts because it's a good place to kind of start in terms of risk reward. And, one of the things that we talked about earlier in the week was we stalled at making that next leg higher. But again, like this area is a great place to be taking more profits versus putting on trades. Down here, we talked about how we did not, we broke through value very quickly. This support did not hold. And then today we talked about how, and these venoms, which acted pretty well today, there's still kind of more speed bumps than anything else. But this was the area that held, which was 3012. So again, this indicator is called the market webs. It provides exceptional support and resistance levels. So I really concentrate on that. So again, if you're playing along, right, with this game in terms of where your risk reward setup is, your risk reward, is something like, hey, I'll go long versus this support. And now you've got resistance. So now we're back into resistance. So again, the way that I interpret short-term support and resistance like this, great places to take profits, and probably the same thing here as we're retesting this and we stopped right back at the end of the day. So this market's giving you some nice little places to kind of say, hey, buddy, don't be greedy here, and don't be, take some profits at the end of the day. So that's kind of the way the game is played for the most part. What happens is, if you've been doing this game for a while, where people screw up is they get really greedy, and they don't take profits, they don't take targets, and they don't stop themselves out too, right? So rather than, I know some people where they never take stops. They just, which is one thing. If you're trading options, right, the premium is often your stop, right? You can't go past zero. They can go out worthless. But I think where people really get caught in this market is when newer traders, when they don't take stops and you have a prolonged downturn like this, right? Something like this, if you're playing that game and you're not taking stops, and you have a prolonged downturn like this could put you out of the game for a little bit, or have the possibility to do that. These little pullbacks, you can manage to basically escape, even though you could be still accumulating positions. So anyway, that's what I've learned, is to basically try to be nimble. If you set a stop in something and price goes through it, honor the stop, and you can live to fight another day. But yeah, being really nimble right now as we're kind of moving sideways. Clearly, I'm not going to go into my whole rant about COVID. I've been doing that now for multiple days. But I think at this point we know that there's plenty of headline risk, and I think today, even though up until the end of the day, which again I don't know if it was short covering, I don't know if it was just a little bit of buying ahead of the Russell rebalance, which is tomorrow, but it gave us a nice tradable play for the day, and right around this, 230, it looked like we might actually go back and test that bottom of value for the day, but we got a really nice turnaround, and so, this was nice. I was looking at some things today, and I'll go over what I started trading in the day, but so here's a good example, right? This NVIDIA gave a really nice signal for the day, and all day this was kind of staying inside value, and then once it broke out of value, it went. So like that's a good, to me that's a really good setup. And I even put on some calls, at the end of the day, because I'm looking at where NVIDIA can get to in the short term, and my eyes light up when I see a break of value, break out of the 5 minute, and this is even better on the 5 minute bar, by the way. So a failed break in the morning, another failed move above value, another failed move above value around 12 o'clock, and then finally you got it and it went. Now notice there's a virgin point of control up here at 383, which is a place if you're long stock to maybe take some targets. What I was looking to do was I said, hey, I'm going to actually put on, these calls are not that expensive, to try to shoot for that VPOC up there. And I put this on at 352, and this thing ramped like crazy into the close. So here's a place like, hey, I just made 50 cents, which is, and that's what, 50 cents divided by 140. That's a 36% profit on a trade in like 5 minutes. And then I even got more. So I was like, hey, I don't even have to hold this overnight. So that's the whole key, I think, to trading. When you get, that's 70 cents divided by 140, you get something like that. That's a 50% return on your money in 8 minutes. No need to even, could it get to this VPOC up here? It could. But for something like this, hey, 50% profits in 5 minutes. Take it. Be happy with it. Put it in your pocket. Go have a drink. So that to me is the difference. Again, you got to have big winners in this game. But something like this where it's like 5 minutes, you get 50% of your money. That's sometimes what weekly options can kind of do for you if you get one of these fast moves. What else did I trade? And again, I was quick with something like this too. I got into Square this morning. We saw some calls right off the bat, and then I got out of it really quick. I said, hey, this is a gift, and I got out of Square at 105 today. I guess it went up a little bit further, went up to 106, but you get a quick hit like that. I'm happy to take those, and then we can kind of go from there and see how things set up. XBI, which I've been talking about, I was on the TDA network today, and I talked about how biotech has been acting really nice, broke out. So I played this. I talked about how I played this on the breakout. I took profits earlier in the week, and then on the dip, I added, and this thing was up 2.5% today. So that was a nice trade for me. And I even took a little bit more profits at the end of the day, just again to kind of force, making sure that I'm locking a good portion, because again, that's a nice looking profit for holding for basically one day. And again, I took this JP Morgan trade on that I put on earlier in the week. Hey, I have no problem taking something like this. This was calls that expire next week, and I thought JP Morgan could run into this stress test. Did I get all my money back? No, but I'm okay with small losers. Again, small losers, no problem. No problems, small losers. Big losers, because this thing was marking at like $1 yesterday, and I'm happy to get this thing back to 210. That's fine, and I'm okay with that. Again, live to fight another day. Make sure that you're making profits on some other trades, and some other ones, are going to be losers. Not every trade is going to be a winner. So again, these things kind of separate how you're doing, in terms of whether you're profitable, or whether you're getting hit hard one day and basically the next day you're just fighting back to get back to flat. And you hear that from people a lot of times who are playing options, because options are a tough game. They get hit hard, one day, and then the next day they're basically fighting back to get to flat, rather than fighting back to get to profitable. The difference is kind of the things that I'm going over here, is that your positioning, your position size, making sure you're not carrying too many positions. And I especially there's a difference too, right? I've talked about that for a while, like not carrying too many positions. But if we go back to the overall market and market breadth, which I know a lot of people are talking about, in choppy markets, you want to make sure that you're not carrying too many positions, because what will happen is you will have some winners, but sometimes you'll have other names that are dragging you down at the same time. So focus is, a smaller focus when we chop around is important. When we're streaking, when not streaking, but when we're trending, that's when you could be a little bit more relaxed and have a little bit more positions. But once we kind of settle down and chop, That's where you want to be mindful, because remember, chop, there's gonna be some names that are trending and doing fine. And I think those are more of the stay-at-home stocks, the growth names, the software names, which are just acting unbelievable. By the way, this Fastly is just, I called it a monster today because it's just unreal. The call buying in this thing, and anytime there's a dip in this thing, like yesterday, they were going after this thing. This morning, they were going after this thing, buying. Finished up 7%. So it just tells you that we still have a lot of speculation in this market because of the Fed is injecting that liquidity into the market. So things like this that have a really good story to them, it doesn't matter, right? People will come at you and tell you, "Oh, this is expensive." Well, it is expensive, but when it will become really expensive is when the Fed takes the money out of the system. That's when you'll see it be really expensive. But for now, there's gonna be names like this that blow out to the upside and just keep going because they are fueling the market right now. So that's where speculation really bubbles to the top, and storied names like this are going to do this, right? Where there's not a big float, and there's speculation in the market. So that's just how it's going to work until they take away the punch bowl. Once they take away the punch bowl, things like this are going to probably come back to earth. So for now, play it, as you can. And if you're not comfortable holding things like this overnight, they're giving you plenty of day trading opportunities. All right, what else anything else that I wanted to talk about? But I think that covers it. So again, I'll reiterate kind of my main theme here is that, counter on days like this and just try not to be overly greedy. SE was a name to me. This thing kind of just flattened out for the day. Finished at 104.32, but like this is another name that I'll take. Even though it's still extended, I'll still take an opportunity to buy the dip in this thing because buyers just seem to come back into this thing. My one trade that I was looking at for like a swing trade today, again, the difference between an intraday chart and an end of day chart is this thing looked great around midday today, but again, it did not close above 33.02. So what do I do for something like this? I always leg into a position. What time did I put this trade on in Kroger? Yeah, about 12 o'clock. And I'll leave room and I'll wait until once this thing closes above 33, I will add to those calls. Because again, I want confirmation and I need a signal. So no signal yet, but this thing is really wound up and coiled. And so again, I just have to wait. Support is going to be down here at 31.62. So again, just kind of have to be patient and wait for a close above 33.02. All right, guys, so that's it. Reminder, just like we talked about with quadruple witching, right, and index rebalancing, tomorrow you have the Russell rebalance. So when you hear Russell, people think small caps, IWM, right? That is true. All of that big ETF rebalances. That's a once a year rebalance. But keep in mind, there's also things like, which I think I went over this already, but there's also the larger cap ETFs too. They rebalance. So IWD, and what's the other one? Is it IWN? No, that's so also small cap, large cap, value. Yeah, that is it. IWN. No, that's small cap value. This is it. IWF and IWD. So large caps that Russell, believe it or not, there's a lot of money that follows these Russell indices. So it will be another one of those days where you saw things like last Friday, like biotech take off into the close and utilities get sold, right? That's a product of people, of this type of rebalance. Does that type of thing happen tomorrow? I don't know, because what usually happens is all the portfolio desks at banks, they pre-position for this trade way before way before the event, which is tomorrow's close. So what they are actually doing is sometimes unwinding that trade that they put on earlier in the week to try to make the alpha by pre-positioning ahead of the actual event. Remember, just like anything else, it's buy the rumor, sell the news. All right, guys, have a great night. See you tomorrow.